Get ready for the most electrifying updates in the world of innovation and technology. The news cycle is spinning faster than ever, and we're here to bring you the pulse of progress, straight to you. You think you know what's happening? Think again. We've got breaking developments that are set to reshape industries and redefine what's possible. From market shifts that have everyone talking to groundbreaking events on the horizon, you won't want to miss a single second of this. Buckle up because the future is unfolding right now and you're getting the inside track. Stick around because this is Electro Drive News. Stock Watch, a shift in sentiment for a key EV player. The market is always buzzing, and today we're diving deep into the financial currents affecting a major player in the electric vehicle space. This isn't just about stock prices, it's about the intricate dance of market analysis, company performance, and future projections that shape the landscape of innovation. Recently, the Chinese electric vehicle giant Nio released its second quarter financial results for 2025, painting a picture of mixed performance that has captured the attention of analysts and investors alike. While the company showcased year-over-year sales growth, the figures didn't quite hit the high expectations set by the market consensus. Specifically, Nio reported second quarter sales of $2.65 billion, marking a 9% increase compared to the previous year, but falling just short of the $2.73 billion anticipated by analysts. On the profitability front, adjusted earnings per American Depositary Share, ADS, were reported at 32 cents, a slight beat against the forecast of 31 cents, offering a glimmer of positive news. The delivery numbers, however, presented a stronger narrative. Nio successfully delivered 72,056 vehicles during the second quarter, a significant jump of 25.6% year-over-year. Looking ahead, the company projected a robust outlook, expecting to deliver between 87,000 and 91,000 vehicles in the third quarter. This forecast represents an impressive growth rate of 41% to 47% year-over-year. Revenue projections for the third quarter were also optimistic, with Nio anticipating an increase of 16.8% to 22.5% from the prior year, translating to revenues between $3.04 billion and $3.19 billion. Despite these delivery and revenue growth figures, a notable shift in analyst sentiment has emerged. Dmitry Pozniakov, an analyst at Freedom Broker, has downgraded Nio stock from a buy to a hold rating. While he simultaneously raised his price target for the stock from $4.90 to $6.50, his commentary suggests a more cautious near-term outlook. Pozniakov pointed to the strong delivery numbers, partly fueled by the initial sales from Nio's new Firefly sub-brand, as a positive development. However, he expressed concerns that the recent refresh of Nio's core models has led to a reduction in the average selling price, thereby exerting pressure on the company's profit margins. This pricing strategy, while potentially boosting volume, raises questions about the company's ability to maintain healthy profitability. The analyst specifically highlighted that Nio's third quarter delivery and revenue guidance fell short of Wall Street's expectations. This divergence between strong volume growth and potentially weaker pricing, coupled with a softer forward-looking outlook, indicates that profitability could remain a challenge for the company in the immediate future. Pozniakov's decision to upgrade the price target reflects the recent recovery observed in Nio's stock, but underscores his belief that significant upside is unlikely until Nio can stabilize its pricing strategies and demonstrate more concrete progress in improving its earnings. Currently, Nio stock holds a moderate buy consensus rating on TipRanks, supported by 6 buy ratings, 6 hold ratings, and 1 sell rating from analysts. The average Nio price target stands at $5.90, suggesting a potential downside of approximately 3.75% from its current trading levels. Despite the recent analyst caution, Nio stock has seen a substantial surge of 40.6% year-to-date, indicating a strong investor interest and a belief in the company's long-term potential. But the story doesn't end with financial reports and analyst ratings. The company is gearing up for a major event that could significantly shape its future narrative. Next, we're heading to Hangzhou for a deep dive into Nio Day 2025 and the highly anticipated launch of a brand new SUV. Event Horizon, Nio Day 2025 gears up for a grand reveal. Mark your calendars, because a pivotal moment for one of the leading electric vehicle manufacturers is fast approaching. This annual gathering is more than just a product launch. It's a celebration of innovation, community, and the road ahead. Nio Inc. has officially announced that Nio Day 2025 is set to electrify Hangzhou on September 20th. This highly anticipated event, confirmed to be held in Hall 5 of the Hangzhou Grand Convention and Exhibition Center, will serve as the grand stage for the official unveiling of the all-new EASE 8 SUV. Nio Day is widely recognized as the company's most significant annual event, a cornerstone of its engagement with its customer base and a platform to showcase its latest technological advancements and strategic direction. This year's theme, Grow with the Light, aims to capture the spirit of progress and shared growth, with the main ceremony scheduled to run from 7:00 p.m. to 10:00 p.m. on the specified date. Preparations for the event have been underway, with Nio initiating user registrations for attendance starting at 11:00 a.m. on September 5th. This year's shift in the Nio Day schedule marks a strategic change. Previously held towards the end of the year, the company announced in July its decision to move the event to the fall. This adjustment is partly intended to leverage the peak sales season typically experienced in the fourth quarter, aiming to maximize the impact of new product announcements and promotions. The upcoming Nio Day is particularly significant due to the impending launch of the third-generation EASE 8. Nio had already provided a glimpse of this new model on August 21st, commencing pre-sales for the large SUV. This latest iteration promises substantial upgrades while adopting a notably more aggressive pricing strategy compared to its predecessor. The third-generation EASE 8 will come standard with a 100 kWh battery pack, with pre-sales pricing kicking off at RMB 416,800, approximately $58,420, inclusive of the battery pack. This figure represents a significant reduction of RMB 139,200, or about 25%, from the RMB 556,000 starting price of the previous 100 kWh EASE 8 variant. Even under the battery as a service (BAS) plan, the new EASE 8 starts at RMB 308,800, a considerable drop from the RMB 428,000 BAS starting price of the older model. This aggressive pricing strategy underscores Nio's commitment to market competitiveness. Company leadership, including founder, chairman, and CEO William Li, has previously emphasized the importance of competitive pricing in the challenging Chinese auto market. Despite the lower prices, Nio management has indicated that the new EASE 8 is still expected to generate gross margins, thanks to substantial cost reductions achieved in its manufacturing and development processes compared to the previous generation. Following the commencement of pre-sales for the new EASE 8, Nio management reported that the model's performance exceeded the pre-sales figures of the popular L90 SUV from its sub-brand, Onvo, signaling strong market reception. Looking at production capacity, William Li mentioned during a September 2nd earnings call that the new generation EASE 8 is slated to reach a production capacity of 10,000 units in October and is projected to scale up to 15,000 units by December. Beyond the EASE 8, there are also whispers in the industry suggesting that Nio might unveil a special edition Firefly EV at Nio Day 2025, potentially based on the European version of the hatchback. The Firefly sub-brand itself has been making strides, having launched its debut model in China on April 19th and commencing deliveries in Norway and the Netherlands on August 14th, marking its official entry into overseas markets. While Nio gears up for this major product showcase, the broader market sentiment surrounding Chinese tech and auto stocks has seen some turbulence. Now, let's shift our focus to the wider market trends and see how Chinese concept stocks, including Nio, are performing amidst these developments. Market Pulse: Chinese concept stocks face headwinds. Navigating the global market requires a keen eye on regional trends. And today, we're examining the performance of Chinese concept stocks as they contend with shifting investor sentiment. Recent market activity has seen Chinese concept stocks experiencing notable declines, with major players like Alibaba and Nio leading the downturn. This trend is reflected in the performance of key indices, such as the Nasdaq China Index, which has registered a significant drop. This broad-based weakening suggests a confluence of factors impacting investor confidence in Chinese technology and automotive companies listed on international exchanges. The decline in Chinese concept stocks is not an isolated event, but rather a symptom of broader economic and geopolitical considerations. Investors are closely monitoring China's economic growth trajectory, regulatory developments, and international trade relations. Any perceived slowdown in growth, tightening of domestic regulations, or increased trade tensions can trigger sell-offs in these stocks as market participants reassess risk exposures. The electric vehicle sector, in particular, is subject to intense scrutiny, with evolving government policies, intense competition, and global supply chain dynamics playing crucial roles in shaping company valuations. For companies like Nio, which operate in a highly competitive and capital-intensive industry, market sentiment plays a critical role. Despite strong product development and delivery efforts, negative market sentiment can overshadow positive operational news, leading to stock price depreciation. The recent analyst downgrade of Nio stock, as discussed previously, while specific to the company's financials, also contributes to the overall cautious sentiment surrounding the sector. When major indices like the Nasdaq China Index show weakness, it often indicates that the concerns are widespread, affecting a range of companies within the Chinese tech and innovation ecosystem. Furthermore, global macroeconomic factors, such as rising interest rates in major economies and concerns about inflation, can also influence investment flows into emerging markets. Investors may shift capital towards perceived safer assets, leading to reduced demand for riskier assets like concept stocks. The interplay between domestic Chinese policies aimed at fostering innovation and economic growth and global investor sentiment creates a complex environment for these companies. The performance of these stocks is closely watched by industry observers, policymakers, and investors worldwide, as they represent a significant portion of the global technology and automotive landscape. Any sustained downturn could have ripple effects, impacting investment in research and development, strategic partnerships, and the pace of technological adoption. Understanding these market dynamics is crucial for anyone looking to grasp the current state and future prospects of China's leading innovative enterprises. While the broader market presents a mixed picture, let's zoom back in on Nio specifically to understand the immediate factors influencing its stock performance today. We'll break down the latest developments and what they mean for investors and the company moving forward. Stock Spotlight, decoding Nio's Thursday trading dynamics. What's driving the movement in Nio shares today? We're cutting through the noise to bring you the essential updates affecting this electric vehicle powerhouse. Nio Inc. ADR shares experienced a notable dip this Thursday afternoon, a reaction attributed to a convergence of recent company news and prevailing market sentiments. Adding to the narrative, Freedom Capital Markets analyst Dmitry Pozniakov initiated a downgrade of Nio stock from buy to hold, while concurrently increasing the price target from $4.90 to $6.50. This mixed signal from the analyst community, a downgrade in rating but an increased price target, often reflects a nuanced view of the stock's potential, acknowledging recent positive developments while cautioning about near-term limitations. Digging into the company's performance, Nio reported its second quarter results earlier in the week. The company posted a loss of 25 cents per share, which was wider than the anticipated 20-cent loss by analysts. However, Nio managed to surpass revenue expectations, reporting $2.65 billion against a consensus forecast of $2.5 billion. Nio's CEO, William Li, attributed this revenue strength to robust demand for its newer models, specifically the ONVO and Firefly, which contributed to record deliveries exceeding 31,300 vehicles in August. This highlights the company's ability to drive sales volume, even amidst broader market challenges. The stock's decline today also comes in the wake of cautionary remarks from CEO William Li regarding a potential slowdown in the Chinese EV market. Li pointed out that government incentives, such as vehicle purchase tax relief, are slated to diminish in the first quarter of 2026. This anticipated tapering off of fiscal support could potentially impact future sales volumes, leading to investor apprehension. Despite these concerns, Nio remains committed to its strategic initiatives. The company is actively pursuing cost-saving measures, including the critical development of an in-house smart driving chip, which could offer significant long-term competitive advantages and reduce reliance on external suppliers. Furthermore, Nio is steadfast in its global expansion plans, targeting new markets such as Singapore, Uzbekistan, and Costa Rica, signaling its ambition to broaden its international footprint. From a technical perspective, ElectroDrive News Edge rankings indicate that Nio possesses a strong momentum score of 89.01, although its scores for value and growth are currently lower. This suggests that while the stock is currently attracting significant buying interest and exhibiting upward price trends, its underlying valuation metrics might not be as compelling to value-oriented investors. As of Thursday afternoon, NIO shares were trading down by approximately 2.59% at 6.157. The stock's 52-week trading range shows a high of $7.71 and a low of $3.02, indicating considerable volatility but also substantial gains from its yearly low. For investors considering participation in the Nio stock market, options range from purchasing shares through brokerage accounts, which may offer fractional share trading, to more complex strategies like short selling or trading options. These methods allow investors to capitalize on both upward and downward price movements, depending on their market outlook and risk tolerance. It's important for investors to conduct thorough research and understand the risks involved before making any investment decisions. And that wraps up our deep dive into Nio's current market standing and strategic moves. Stay tuned as we bring you more essential updates from the cutting edge of technology and business, right here on ElectroDrive News. That's a wrap on today's electrifying news. We saw Nio stock shift to a hold rating amidst mixed Q2 results, but the company is gearing up for a major reveal at Nio Day 2025 with the new Ease 8. Chinese concept stocks faced a broader market dip, impacting giants like Alibaba and Nio, while Nio stock saw a Thursday decline amid analyst downgrades and cautious market outlooks. Don't miss out on any of the action. Hit that like button, subscribe to ElectroDrive News, ring the notification bell, and follow us on all social platforms for nonstop updates.